First trade of the day. Well, second trade of the day now. I just got to break even over there on the NQ. The ES right now. The entry point was right here. My stop should be 10 ticks away. And there it is. I got 1 tick of slip, as you can see. Now the stop has gone 4 ticks in a profit. It is at break even. It needs to go right there to get the goal for the day. Right there to get the goal for the day. Come on, get it. There it is. Goal for the day. Ding, ding. 2 trades. Alright. That is what I'm talking about. 9:29. So today, 2 minutes, 2 trades, $1,000. That is how simple it should be every day. See, the Russell did end up going down, but I didn't want to take that because it's going right down into the zone. And you got that one too, D? I'm pretty sure you did, right? Okay, and over here we got to break even on this guy. Alright, that is what I was talking about the other day when I was saying starting at 9:27 is usually just enough time to get a trade set up right before the open, and then when the open happens, there's just enough momentum to give you the goal for the day right at the very beginning. Now the YM hopefully is not going to kick my butt today like it did yesterday. We will see though. It's not going to give us anything we can use right here because it's right inside the weekly trading zone. Alright, the NQ dropped right down to the zone. I thought the earnings that came out were good. I don't know what... we had some other stuff going on today, I think, didn't we? Yeah, that's what I thought. The earnings that came out were good. That's why I was saying, why are we going down so much right now? Yeah, I haven't either. But we did have high impact news today. Okay. So we're looking for opportunities here. We need things to get into the overbought and away from the weekly trading zones. Okay, the ES is the closest thing that's going to give us another trade. I don't know if any of you guys grabbed onto that ES trade. And good morning, Thomas. Yeah. Well, yeah, the way that they're looking at it is opposed, not how it is for consumers, but how it is for interest rates is what they're looking at it as, I think.